Volatility 25 index. This is the 24-hour time frame. You can see we had a rejection block here, and as a result you have price retracing to the lower side and rejecting above it with a wick. Now for us to see how this wick looks like, we have to drop into the 4-hour time frame. Let me first go to the 24 so that we can mark that exact level with an arrow like this. So this is a wick rejection. How does it look like in the 4-hour time frame? And this is how it looks like in the 4-hour time frame. It was a bullish engulfing candle. You can see that. So this bullish engulfing candle in the 4-hour time frame gives us a range that we can work with. So this range means that we are waiting for price to retrace to the 50% level of this range, and then we take buys because of the bullish engulfing candle has given us a bias, a bullish bias. So the moment it retraced to the 50% level, you take a buy there, and then stop loss just below this engulfing candle, and then take profit. You want to target this level here and then this level here because of this relative equal highs. So this becomes 1 to 4.87 for the first take profit, and the second one becomes 7.15 risk to reward ratio. You would have probably even gone higher and taken this one and left the trade to run as a swing trade, so up to this level, and now you have a final risk to reward ratio of 17.47. But you will not take this trade in the 4-hour time frame. Instead, you are going to refine the entry in the 15-minute time frame. And where are we refining this entry? So we are refining this entry at this 50% level, and we can even move this line here so that we can refine that level in the lower time frame. And time frame alignment tells us that we need to refine this entry in the 15-minute time frame. So in the 15-minute time frame, where are you? Right here. Now you are looking for a bullish engulfing candle at this level, or at a level that has an area of value or a point of interest. And in our case, this becomes, let me just show you. So this is the midpoint of this range, and we have an engulfing candle right at this point right here. I'll just mark it with an arrow or a box like that. Let me mark with an arrow. So this bullish engulfing pattern right there, and when you look towards the left, you will realize it is coming off from this fair value gap right there, and that tells you now our bullish bias is confirmed. Our entry, as it has given us an entry criteria, and we are now good to get into a trade. At this point, you just take an entry, a trade at the point where now you have that bullish engulfing pattern. Stop loss just below it right here. Remember, in our previous 4-hour entry, our stop loss was supposed to be at this level, but now you can see our stop loss has become very tight. Yeah, placing it just below that engulfing pattern, and then now you have even multiple take profit levels at this point. So you can zoom out like that. Our first take profit can be, actually it can be here, first TP here, where now you book partials and leave the rest of the trades at break even, And now looking at this, you would have gotten 4.18R, and then this level is around 8.05 risk to reward ratio, right? Now you remember our 4-hour levels, structural levels, where we would have taken we would have put our take profit, and you realize that we even have a higher risk to reward ratio of 15.88, and then 22.59 at this level. And if you decide to hold this trade for a swing trade, this was Friday 16th up to Wednesday 21st for that take profit. If you had decided to hold this trade further up to this level, maybe you will now decide to leave the rest of the trades to run after taking partials, you realize that is a risk to reward ratio of 54.75R risk to reward ratio, and that is how you would have participated in this price action.